The outcome of the November 3 U.S. election will determine the future of fossil fuel production when it comes to regulations and government support for oil producers. For decades, U.S. policy has mostly focused on achieving energy independence from the Middle East. Over recent years, the United States surpassed Russia and Saudi Arabia as the world's leading petroleum producer. The fracking process caused output costs to decline, and fewer regulations under the Trump administration turbocharge production. If the president wins re-election and the Senate remains in the hands of a Republican majority, we should expect a status quo approach to U.S. energy policy. However, the Democrats are leading in the polls, and the potential of a sweep that includes the White House and Senate are high. The Democrats' progressive wing favors a ban on fracking and a shift from fossil fuels to alternative energy sources to power the United States. While former Vice President Joe Biden has said his administration will not end fracking, he acknowledges that it will introduce a shift from the process. The position may not be fast enough for influential environmentalists on the left, who will put pressure on a new administration. The bottom line is that U.S. oil production will decline under the Democrats. While replacing hydrocarbons with other energy sources may be a noble pursuit in the eyes of many, the reality is the U.S. and world continue to consume petroleum-based fuels. Any sudden increase in regulations could hand pricing influence from the U.S. back to Russia, Saudi Arabia, and the international oil cartel, OPEC. U.S. policy in the aftermath of the election could cause volatility over the coming years in the oil futures arena. It may even push the price of the energy commodity appreciably higher. At the same time, the downward trend in the dollar and the Fed's encouragement of rising inflation are bullish for commodity prices, and crude oil is no exception. The outcome of the November 3 election is a significant factor for the oil market. The economic legacy of 2020 could be the most potent force for the crude oil market over the coming years. While another significant wave of COVID-19 infections threatens to push the price of crude oil lower in the short term, we should expect higher prices in the coming years. The extent of the move higher could depend on U.S. production policy in the aftermath of the November 3 election.